Hello there. I am Mark Sebastian, the founder of OptionPit.com, and this is the AM Volatility Report. Reminder, none of this should be considered investment advice. Consult your financial professional. Uh, all right. Now, let's talk about the market. Here we are. We're down $1. Not the most exciting day. Markets are, they had a nice little rally on Friday. It looks like we're going to be range bound for the better part of a week. We're heading into a 3-day weekend. That typically means time to relax. Most Wall Street people are leaving early or leaving early this week or leaving, taking next week off. So you're going to see basically nobody putting on any major positions, no craziness unless there's a real opportunity. So what does that mean? Well, I think the next couple of days are going to be slow. We're going to meander, range-bound type of movement. We're likely to see volatility relax, recede, as opposed to blow up one way or the other. And things should remain relatively so. I would point out Apple up again. There seems to be some hedge fund groups buying back in. We do have a couple earnings. You got Best Buy this week. You've got AutoZone. Dollar General has earnings this week coming up. So there are some names with earnings. Ulta Cosmetics, if you wear a lot of makeup like myself. And of course, Valiant sometime this week. So there is some earnings stuff going on. But as we look at things, we're expecting slowness. We're expecting the market to be range bound and over the week, volatility to back off a little bit. I would point out that financials are a little soft, as maybe you might expect them to be after the run they had and the way the Fed seems to be walking back rates a little bit. There's also some softness in some hot names like Amazon, Facebook, and Google. That money appears to be rotating into Apple. As I view it, I think we could see some continued softness in rates and vol go up a little bit. I'm also watching EFA. Now, what is EFA? EFA is kind of the Europe S&P 5. It's like the Europe spider. And I want everybody to notice that 30-day vol. All right, it's starting to go up. Why? Well, we got this Brexit vote coming up now. All right, and 60-day vol. All right, we've got this Brexit vote. Watch for this to move. All right, this is one we're going to be watching for real opportunity. There's something there. All right, the other spot, XRT. At a certain point, retail vol needs to back off. It has been so bid, it is unbelievable. Just if you look at where, that vol has come off the lows from April and really done well. All right. And so there's some opportunity, we think, for some different types of setups there to play implied volatility to back off a little bit. All right, now finally I want to note out VVIX. Friday, let's go through it. Friday was the sharpest drop in VVIX that we have seen since April 18th. All right, now what I want you to notice is that when we saw it drop that big, things trended lower and the market rallied from April 18th basically through the end of the month. And I think we're setting up for something like that this week. I think we rally all the way through maybe till Tuesday. And maybe we start seeing some action Wednesday or Thursday next week. When VVIX takes a dive like that, that's usually a sign that the hedgers have given up for a couple of days. And that may be what we're seeing right now. So that is kind of the way I'm viewing kind of everything. I'm expecting vol to back off. I think you'll see the S&Ps meander a little higher you know, if not off to the races, and that will be things. All right, folks. If you got questions, you can email me, mark@optionpit.com, or you can call me 888-TRADE-01. Have a good one.